Right, good morning, and to Monday, before I go to the screen, the question we've got out there, if you leave it open, is obviously the indices are down. However, most of the weekend press was bullish. All the good news to people from Boris Johnson, from Europe, from America, everything else, vaccine-wise, everything is hunky-dory. However, there's one very massive panda in the room that I've asked most of you is why the markets are down, and yet not yet one of you has given me the answer. So before we go to the screens, any more ideas? Why you think the market indices are down this morning?
Perhaps people don't like holding up stuff before an announcement.
No, there is a big reason why the markets are down. And another quick thing, I think we sent it out in the discussion group. And a few other things. You know, markets move for certain reasons, yeah. And the reasons out there for some of you haven't seen. You might look at a chart, you're not even looking at the news. Something's moved more than the indices overnight. Any other clues?
Oh, the bond. Is it the bonds?
Yes, sir. Thank you very much. Yeah. We'll go through it quickly. I know most of you are relatively new to trading.
The bond yields.
Yes, thank you very much indeed. Those things are realising that bond yields, the 10-year yield, are up 4 basis points. It's fairly massive. Yeah, they're up to 1.386, and the others were even higher, 30. Yeah, that is telling you that the market thinks, there's a bit of trouble afloat. And some people say, well, what's the bond yield? Why hasn't it yet to attract into the indices? Well, that's happened overnight. Yeah. So be very much aware of them. We are teaching more people about bond yields, and you should be aware of them. Sometimes when the figures are coming out now, the bond markets are moving more than the indices and the FX and most of the other markets. So we'll be working more on the bonds and how to trade them. The only problem currently on the retail platforms, the spreads are rather wide. Yeah, but don't worry about that. So I'm going to quickly go through the markets. Headlines: US Treasury yields massively up 4.4%. We'll move the indices. I started trading at 6 o'clock this morning and sold the indices in the back of that. Yeah, the dollar at $1.40. The last time, I'll turn the score down. The last time the pound was here was April 2018, when I think we had the vote with Theresa May. Prime Minister Johnson is addressing MPs this afternoon at 3:30, and he goes public to the rest of us at 7 o'clock. Rumours that the other bearish news was never mentioned for the FTSE today is that Sunak is to raise corporation tax up to 1%. Do you know what corporation tax is currently? Anyone? No, you should know it. 19%. Obviously, it went up to 20%. But also rumours that up to 2023, he wants to raise it up to 24%. That's not good for the market, obviously fairly inflationary and everything else. Tuesday, for instance, we have HSBC figures out, which is quite bad. Overnight, we have a massive COVID thing in France, in the Moselle district. I don't drink wine, Moselle. Bianca, you drink wine. Where is the Moselle district? I think it's something like middle to south of France. I'm more of a Stella man, so a bit further down to Belgium. Anyway,
Stella Artois.
Exactly. At 9 o'clock, we've got German IFO expectations out with the business climate. That's my next heads up. 1:30, we have Chicago Fed national activity, and obviously at 1:45, the big news of the day is Christine Lagarde talking. Had that about because she's talking about the economic climate. 3 o'clock, US lead indicators, not that important. 6 o'clock will be Bank of England, Villager, I think her name is. Obviously 7 o'clock Boris Johnson, and 8:30 Fed Bowman. Right, we've got 4 or 5 minutes. If you see my screen here, we've got 4 people waiting to come in. Daniel, we've got some new people coming.
Blimey.
I know.
It's a good Monday word, that, blimey.
Good morning, Dale.
Good morning, Daniel. We do. If you're at school, Daniel, you'll be on the naughty step. We start at 7:50 and it's 7:56. Some people turn up on time even though they're in hospital.
Yeah,
they get an apple for that. Right, I've got the FTSE up there and the DAX up there. So we do expect both of those to be fairly busy at 8 o'clock. Why? FTSE's down 0.78% and the DAX is down 0.74%. So we're roughly down the same. So basically, we can safely say that is probably down to the bond yields. Yeah, it's strange that a lot of you have learned this over the last 2 or 3 weeks, but when I asked you what market's off, not one of you had a clue. Now, that for you for doing your research, we have sent the emails out there. Most of you are on that email list. Yeah, you would have thought when I wake up in the morning, I look at the markets, I think if they're up 0.7% or down 0.7%, there is a reason. Because if you look at it last week, most of the markets opened last week flat. Remember, we were almost unchanged all week. Yeah, the FTSE was hovering around 66, 625 all week. Are we breaking out of that? Yeah. So the same thing. If you look at the FTSE here on the right, we've got the market profile on there. You can put the DAX up there, whatever you want. Look at that. But
value I.
Yeah. But we should be going into Q, obviously, at 8 o'clock. But remember, we are opening almost 1% off. So you would have thought those people who shut their positions or kept the position on 4:30 on Friday and bought it, they may want to get out here. Remember what we said the stops are anywhere between this, where we are 6500 all the way down to the lows last week. Or what were they? 70, 84, round about here. So we expect there to be stops there on the opening because people who were long at 4:30 only trade 4:30 to 8 o'clock in the morning to 4:30 in the afternoon. Yeah. However, for other people, there may be an opportunity to buy. So as we all know, when we trade the price open, we have to be as neutral as we can. We are aware that the FTSE was obviously trading up here, where we are up here at 4:30. So we had a sell-off from 4:30, obviously. Yeah. From 6644, that candle 30 minutes all the way down, and obviously the Wall Street, we closed fairly weak on Wall Street, yeah, rally back up. Well, obviously all the news over the weekend, but the bond yields have taken us back down this morning. This is why it's very risky to trade anything over the weekend. So since 1 o'clock this morning, the FTSE's basically come off almost where we are now, 0.8%. Do we look at the Fibonacci, whatever we want to look at? We've got it in here. Whack it in here from where we open to down here on the close, or on the low rather. And when we look at that, 66.10 looks like it's 09. That was the level, wasn't it, from Friday? So you may look at that as a small pop POC as we come into 8 o'clock. And we expect to see the price actually come in as people come in and buy and sell on the open. It's going to be very easy either way, because our movement has been so much as such. I'm another looking at the DAX. We've got both screens up there, and again, the DAX would probably be slightly more clean, but it is more volatile. We've come from 8 o'clock, so the DAX has been easier to see, but we expect the to be in there. What is bad from you lot today, and you've got to take a wrap around the knuckles, that not one of you questioned it or asked on the discussion group why were the indices off so much. All we've had is 2 or 3 people say how good Boris Johnson is, how good the press was over the weekend, but to come in and from say 6 o'clock this morning and think why every single indice in the world is off. Yeah.
They've both come off quite a lot as well now, haven't they?
Come off quite a lot, and that is, we go through it. If we can quickly pop over here, those of you who are trading, yeah, just listen. I'm going to whack on the bond markets, and quickly, those of you who have talked before, are the bonds. You don't see as much on IG here, but investing.com with the things that if the bond yields are up, yeah, and we can't see the bond yield prices here, the futures markets are the other way around. Yeah, I'll do obviously a zoom at later, explain to you. But going back over the years, basically the bond market leads the way, and obviously when we've got interest rates in most of the countries at almost zero or negative, it's fairly worrying when you've got bond yield 1.38%. They're obviously saying that they expect inflation to creep up, and they're obviously expecting that the government has to raise money. So they're basically their coupon to pay for a 10-year yield is 1.38%, whereas you think you've got interest rates in the US currently at almost 0 to 0.25. for the next 2 to 3 years. One of those things isn't right. And the bond market has been telling us for all year that something is aloof and coming around the corner. And all of a sudden, it could be something like today that can move the market. We don't see as much of the German bond because obviously the ECB are talking today and they've got negative rates and they're in so much trouble they won't change. But the US market, you see here, the bond markets on no shit down 0.71%, down 0.5. You know, remember this, down 0.7%. Let's see how much Wall Street's down or UK's down. It's almost down the same. Yeah. So the bonds are leading the way as such. Again, you know, we said on that FTSE, we sold at 8 o'clock. I don't think we saw the prices up here at 8 o'clock, but then again, we see the selling coming on to the DAX, and the DAX has been the easy one. Yeah. From 8 o'clock, we basically had it almost clean, 50 ticks. Yeah.
I got stopped out.
Well, that's life. You put your stops in for your reason. Yeah.
Yeah.
And everything else. But the reason behind it is that we were aware, we should have been aware why the markets were off. Yeah.
Yeah.
Not knowing why the markets were off 50, 60 ticks, it's a bit like gambling. Most of you come in and thought, well, you know, most of you who come this morning would have thought the FTSE and the DAX would have been up.
I've got to be honest, I did think that, yeah.
Yeah. So the whole reason when you come in, you think already, look, the DAX is down 150 ticks, 1.1%. That's a big move from what we've had before. You know, so you feel what's come up, listen to the news, and is it because now everyone's happy with the vaccines? That argument that everyone's got a vaccine, everyone's going to be vaccinated. I reckon that most people are going to be vaccinated by the summer, so that no longer pushes the market up and down. There is something very much up in the markets today that we have to be aware of. Yeah, and no surprise now that we've got some massive red candles appearing in markets. Yeah, listen to the news, but also, yeah, be aware. I mean, to me, I'm a bit annoyed because none of you said why is the market off so much and why is it still up? Yeah, you know, and that's what we're here for. We're here to trade on the opening for that very reason, to take advantage of that news that has come out. It wasn't so clear in the FTSE, I accept that, but in the DAX, and let's have a quick look at the Euro stocks while we're here. And those of you new, you know, you can mix the Euro stocks, yeah, and the index because it's a slower index. It's a bit like Wall Street and S&P we've gone from. So basically, from 8 o'clock on the Euro stocks, you would have got the 12 ticks. You know, we say you're going to run it 3 or 4 times more. So be aware of what happened to the market and the bond yield. You would have come in slightly bearish, like we said. Yeah? Because you hadn't done your homework properly and read up. I mean, I think on the emails that we sent out this morning, quite a few of them did mention the bond yields. Yeah. So again, look into it, and in a way, I'll try and get a bond price. But remember, the bonds are coming off. I'm telling you that they think the market's fairly inflationary. Okay. Did anyone trade over that?
No.
Did anyone manage to get short? I think it was easier looking at Euro stocks and obviously DAX to run that trade in your market profile. On the FTSE, it wasn't necessarily that clear.
Yeah, I've been short DAX since 7 o'clock as well.
Yes. But I mean, Bianca, were you aware of the bond yield scenario?
I was.
You was, exactly. So I mean, I know it's fairly new, but you know, when you go back, say 10, 12 years ago, the bond market always leads the way. So I'll try and snatch up some bond market news for you to read up on, because most of you, I think, are a bit behind the curve on that. Only because the bond markets haven't really moved that much, only because of QE. They've only gone one way up. But be aware of that. And we might do a Zoom for the newbies, how to trade government bonds. They're fairly simple on there. Don't be scared of them. Yeah. And there's different ones you can trade that are, I think the ones I've done one-to-ones with, we can go from 10, 5, 2 year to 3 months. And they all reflect where they think the market's going to go. Basically, and also those of you who haven't done the government bond multiple choice, it's worth doing it just so you might understand some of the wordings better. Okay. Again, we haven't got a lot. Again, remember 9 o'clock. We've got IFO, and we'll put the expectations out in the next half an hour. Those of you on there's few of you who we've got our one-to-ones will start at 9 o'clock. The rest of you have a good day and just keep your eye on the bond markets. All right. Thank you.
Will do. Thank you, Neil.
Yeah.
Just lost money trying to trade.
Thanks, Neil.
Thank you.